And now what you see is Wall Street, who really was kind of ignoring it or trying to stiff arm Bitcoin, has now said, wait a second, let's open up the doors and let's embrace this thing because they figured out how to make money. And so you're seeing Bitcoin put into the Wall Street wrappers. First, you saw it with the ETFs. Now you're seeing it with public companies. You also have heard people announce things like Bitcoin and real estate funds. I think you're going to continue to see Wall Street take Bitcoin and put it in every single corner of the traditional financial system because ultimately Bitcoin brings volatility. Bitcoin brings financial return in a way that they're not used to seeing. And so I think that Bitcoin is something that is going to bring more customers, more assets, and more profits for these Wall Street institutions. And that's their job, is to go figure out how to grow their business, and Bitcoin can help them do that.
Pompliano opens with a powerful thesis. Bitcoin remains the undisputed king of the crypto market, and that's unlikely to change anytime soon. While altcoins like Ethereum and Solana occasionally capture speculative attention, none have managed to break new all-time highs this summer. Bitcoin, by contrast, continues to lead not just in market cap, but in mindshare. Wall Street's capital, research, and strategic focus are overwhelmingly centered on Bitcoin. By the way, if you're enjoying this breakdown, make sure to like the video, subscribe, and drop a comment below. It not only helps the channel grow, but also signals to the algorithm to share this content with more people like you. Let's continue. Institutional flows don't lie, and right now, they're laser focused on BTC. Pomp makes it clear, while other assets might pump temporarily, Bitcoin is a primary on-ramp for institutional adoption and the foundation of the digital asset economy.
Bitcoin has established itself as the king of the market. I don't think that's going to change anytime soon. And I actually think most of Wall Street's time and attention is on Bitcoin. There are other assets that from time to time start to get some capital flows. But if you look, things like Ethereum, Solana, et cetera, they still haven't set in new all-time highs this summer. And so I think that Bitcoin has kind of broken away. Doesn't mean that some of these other assets maybe in the future can't do that, but Bitcoin definitely continues to dominate the market, both in terms of actual dominance of market cap, but also I think just capital flows and time and attention.
We've been having a lot of people on to talk about stablecoins.
Yeah, well, the nice thing about stablecoins is they don't go anywhere other than stay at $1. So, they can grow in market cap size in terms of how many people are using them. But I don't think people really use stablecoins as a comparison to Bitcoin or altcoins where they're looking to try to drive some sort of financial performance.
What type of, I hesitate to call it derivatives, but there's a lot of different Bitcoin-based products coming out at this point. What do you think has staying power?
Yeah, well, if you really just look at what's happened over the last 5 to 7 years, is Bitcoin essentially went from a contrarian trade to a consensus trade. Everyone now, for the most part, is convinced that this thing is going to be around for a long time. And now what you see is Wall Street, who really was kind of ignoring it or trying to stiff arm Bitcoin, has now said, wait a second, let's open up the doors and let's embrace this thing because they figured out how to make money. And so you're seeing Bitcoin put into the Wall Street wrappers. First, you saw it with the ETFs. Now you're seeing it with public companies. You also have heard people announce things like Bitcoin and real estate funds. I think you're going to continue to see Wall Street take Bitcoin and put it in every single corner of the traditional financial system because ultimately Bitcoin brings volatility. Bitcoin brings financial return in a way that they're not used to seeing. And so I think that Bitcoin is something that is going to bring more customers, more assets, and more profits for these Wall Street institutions. And that's their job, is to go figure out how to grow their business, and Bitcoin can help them do that.
I mean, how many strategy, and it used to be MicroStrategy, but how many treasury officials at different companies are thinking about somehow not going exactly what strategy, but putting Bitcoin into the treasury? Is that?
Yeah, well, look, I think the bigger conversation here is there should be way more pressure on the public company CEOs who are leaving a very large portion of their economic value for their shareholders in dollars. The U.S. dollar has lost 30% of its purchasing power in the last 5 years or so, since 2020. The S&P 500 denominated in Bitcoin is down 85% since 2020. Bitcoin is a much better store of value than U.S. dollars.
I guess people would say, are you out of your, people that don't believe in the whole story of crypto and Bitcoin?
Well, the Bitcoin,
I don't want my company speculating on, and as a shareholder, they would be, petrified to have a large stake in Bitcoin.
From a Bitcoiner's perspective, We think that they are speculating on the U.S.
On the
dollar's
dollar.
ability to store value. And so there is two things that have happened over the last 15 years. As Bitcoin has increased the purchasing power of the people and the companies who hold it, the U.S. dollar has destroyed that purchasing power. And so again, it goes back to the fact that if you are running a company and you have shareholders and your job is to protect the economic value of that business, are you better off holding dollars for the next 10 years or putting it in Bitcoin? And I think what you're seeing is that this idea of storing corporate assets in Bitcoin, again, that is now a contrarian trade. I think it will become a consensus trade over time.
What are you going to do with your blank check thing, your pro cap thing? You looking around?
So we have two different deals. We obviously have the SPAC, the ProCap Acquisition Corp. We're looking to buy a profitable company
Like what?
In the financial services sector. We think that there's a really big opportunity to go buy a great business that's profitable, that's growing quickly, that we can then use social media distribution to significantly enhance the business. And there's a lot of great companies that are out there, and we're going to go try to find one of those and figure out if we can do a great deal.
Is that what you're spending all your time on right now?
Well, look, I run a investment firm that's got, a team. We do a lot of deals. We do things in the private market. We do things in the public market. We incubated businesses. We're trying to build a firm that understands kind of this intersection of the digital world or the internet native world and traditional finance. And so far, we've been able to put together a couple of deals that I think are pretty interesting, and we'll see how it goes.
What's the next big thing to move Bitcoin higher, what do you think? Because it seems like you've gotten everything you wanted, haven't you, at this point?
Oh, there's still a lot more that we're looking for.
Want?
I think there's really three things that people are kind of paying attention to. The first is the United States government at some point is going to announce that they're buying Bitcoin. Creating the initial Bitcoin kind of strategic reserve and sitting the Bitcoin that we already had there was good, but that's kind of the not the main dish. The main dish is when they start buying, and I think that will happen at some point. The second thing I think you're going to see is you're going to see some of the last standing people on Wall Street capitulate. And so there's a couple of firms that continue to say, hey, we think that this is speculative. We think this isn't good enough for our clients. I think that they'll kind of eventually give up and wave the white flag.
Pompliano points to a powerful historical pattern. When Bitcoin breaks a previous all-time high, it doesn't just inch higher, it often doubles within days. Why? Because that moment triggers global price discovery and a surge of FOMO-driven demand. He reaffirms his long-standing bullish targets, $100,000 and $200,000 in the short to mid-term, and $1 million plus in the long run as Bitcoin continues to absorb global asset allocation. As Pomp puts it, Bitcoin is gold with wings, a programmable, global store of value light years ahead of any analog alternative. If you're watching closely, these aren't just price targets or signposts for a much larger financial transformation.
Currencies exist because of trust. People know what a gold coin is, and so people, it's been around for thousands of years. They know that there's a limited supply of gold in the world. So they attribute value to gold coins. They trust gold coins, and they trust trading with one another in gold coins. Fiat currencies replaced gold coins over the years, and it really came down to trusting that the government would be responsible with the printing of that currency. And in many cases, governments were responsible, and so the currency was trustworthy. I mean, since Germany suffered the hyperinflation of the 20s, the German, Bundesbank was one of the most conservative central banks in the world. And, the German mark was an extremely strong currency post-World War II, all the way up until we got into the real late-stage fiat post-71. The Swiss in the same situation. Their currency was very, very sound. But the trust in the currency is really like saying the trust in the politicians and the central banks, because the politicians and the central banks manage the currency. They have the ability to change the reserve requirements. They have the ability to push the interest rate up and down. They have all kinds of powers and ability. They have the ability to bail out a failing institution, which is what they did in 2008. They have the ability to print money. And so once you give all these abilities to the central bank and the government, and they're really kind of, joined at the hip, so to speak. Once you give all these possibilities, all this power to these people, you got to believe they're not going to abuse it. And the fact is, there've been a lot of examples of how they will abuse it. Oh, well, just a little bit. We'll just, we need to keep the wheels greased. We'll just print a little more here. Well, okay, fine, but that shows up in inflation. And so, but back to how it's going to manifest. It'll show up first in the bond market. So, the bond market is a place where people go to park their money for long periods of time and get a return on it. If you know you have cash that you don't need for 10, 20, 30, 40 years, you can put it in a bond market and you'll get paid a certain amount of interest. And if the entity doesn't fail, you get your principal back at the end of the time period. They've just got use of your money in the interim. But when that confidence, that we all trust these fiat currencies because we trusted our governments, and there was a time when it was worthy of our trust, they weren't debasing the currency nearly so much. But now that they are debasing the currency more, the bond market is waking up and saying, hang on, wait a minute. You want me to hold this thing for 20 years and get paid 3 or 4% interest when inflation's running higher than that? And I think you guys are going to spend like crazy and create even more money. Nah, I don't think I want to do that. I'm going to sell my bond. And so, the act of them selling the bond means there's less demand for the bonds. And so the interest rate goes up. Well, once the interest rate goes up, that goes all the way across the curve. And everybody who owns a bond now, the interest rates are higher. And so when those come to be rolled over, the government has to pay more in interest expense. So they've got a bigger loss. So this is what I'm describing as a debt doom loop where, the government prints money, or the government borrows money to cover its deficits. It creates bigger bond balances in doing it. The bonds that get sold bring more supply into the bond market, maybe with no more demand. The way you balance supply and demand is interest rates go higher. Oh, interest rates are higher, 37 trillion of debt. We got to pay even more interest. Oh my, tax receipts didn't go up. Our deficit's even bigger. We got to sell even more bonds. And so it's a rinse, wash, and repeat. It's a negative feedback loop that gets worse and worse. And so what I'm watching very carefully, what I think is a big signal for the next crisis enveloping us and for the big print, therefore coming soon after, is the bond market. And we've seen little, squiggles around this. We saw Liz Truss have a problem with the British bond market in 23 or 22, I think it was. We saw our bond market in the fall of 23 went through 5%. The Fed came out with a lot of jawboning to get it back down. So the rate hiking cycle was over. There talk recently about, a return to QE. The Treasury Department has been buying some of our bonds with some of the TGA, which is the government's checking account. So they're, the Japanese 40-year bond the interest rate there has been going up very sharply. And that was always a currency in a country that had a big carry trade.
If any of this resonates with you, don't just watch the next bull cycle. Position yourself for it. Share this video with someone who still might be missing the bigger macro picture. Drop your thoughts in the comments. Where do you see Bitcoin going from here? And make sure to subscribe for sharper insights on macro, crypto, and long-term wealth preservation. Until next time, stay informed, invest wisely, and stay ahead of the curve.